Gold sharply higher this Tuesday, hitting a 3-month high. We have Jim Wyckoff next. And Jim Wyckoff is with us this Tuesday. Jim, thanks for being with us.
Hello, Danielle. Always nice to be with you.
And what a turn of events we're seeing this week, Jim. Gold hitting a 3-month high. So my question to you is, how much of this is really based on safe haven demand due to the tensions in Syria, or is it just short covering we're seeing?
Danielle, my bias is that, certainly we're seeing a bit of short covering, but I think you're seeing stronger emphasis on safe haven demand and technical buying. We've got December COMEX gold futures in a 2-month-old uptrend on the daily chart. What that means, when you really break it down, when you see a price uptrend on the daily chart, that means the path of least resistance for prices is going to be sideways to higher until proven otherwise. And that's what we've got going on right now. So that is auguring for more technical buying that comes in and pushes prices still higher. And also you've got the safe haven demand due to the possibility of U.S. military action in Syria, and with the potential for that to spill over into maybe some other violence that could occur on a spillover effect in the always volatile Middle East.
In other news, Jim, we saw Germany's finance minister stating that they don't see another Eurozone bailout. How significant is this statement? Seems a bit sweeping to me, Jim.
Well, that's an interesting point. Right now, the marketplace is not focused on the Syrian situation. It's focusing on the Fed meeting in September, the FOMC meeting. However, I suspect that as we move on into the fall, and if the European Union starts to see some hiccups again, if you start to see some economic weakness, if you start to see the European bond markets start to plummet and the yields start to rise, then that statement from the German official is going to have more significance. If the Germans, Germany is the leading economic powerhouse in the European Union, if the Germans don't want to provide any more bailout money for these troubled EU nations, then that's certainly going to be a market factor, and it's probably going to be bullish for gold just because of the uncertainty. However, it's one thing for an official to say something, to produce that rhetoric, but when it gets right down to it, and if the European Union is in significant turmoil, it certainly wouldn't surprise me to see that official maybe soften his remarks a bit.
Jim, seems we'll be gearing up for an exciting September. Next week we have a shorter trading week. What do we tend to see the week before September starts?
Well, let me give you an example. Yesterday in the U.S. stock market, you saw the lightest trading volumes of the year. So we are seeing winding down of European and North American vacations. We've got the U.S. Labor Day holiday upcoming this weekend. You still don't have the focus of the marketplace, being right back on the markets like we will have next week. We're still seeing people, looking forward to some time off. And once we start trading next Tuesday, you're going to see, keener focus. You're going to start to see issues like the U.S. debt problem. U.S. Congress is coming back. Then next Friday, we've got the U.S. jobs report coming out. It's going to be more tense times for the marketplace starting next Tuesday, the day after the U.S. Labor Day holiday.
Let's now get to your Wyckoff market rating for gold and silver this week. Jim, last week we saw you be quite generous with the metals, giving gold and silver both a 5. What are you bringing us this week?
Daniela, I'm giving gold a Wyckoff market rating of 6. That's in the bullish camp. We see this uptrend in place on the daily chart. The bulls do have upside momentum. We've got some overhead resistance at the 1426 level in December gold. We push above that level, and we're going to probably quickly challenge the 1450 level. On the downside, you've got support at 1400 and then at 1384 in December gold. Looking at the silver market, the silver bulls they have good upside momentum. I'm giving the silver market a rating of 6.5, and that's for December COMEX silver. We've got support at the 23 level and resistance at the 25 level for December silver. So the bulls are making some good progress in the silver market also.
And Jim, before I let you go, what will be needed in order for gold to stay in this $1,400 territory?
Well, Daniela, let's put it this way. I think for gold prices to turn back, you're going to probably have to see some stronger U.S. economic data, a strong jobs report a week from Friday. That would probably put a bearish dent in the market. But right now, you've got the bulls with some near-term technical momentum, and you're going to see prices continue to trade sideways to higher until we see a technical signal to suggest otherwise.
Jim, thanks so much.
Can't wait till next time, Daniela. Bye-bye.
And thanks for tuning in to this edition of Technically Speaking with Jim Wyckoff. We'll be back next week. In the meantime, you can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Cambone. Thanks for watching.